All right, so I think it's about time that I should get started. So let me take down a timestamp, so that way that anyone who wants to come back, or actually anyone who wants to come and see this for the first time, they can actually just go right to the timestamp where I start talking. Because for this whole time I was just sitting around waiting, seeing if any of my advertising paid off, which my advertisement did not pay off. It happens. I I don't know. I don't know, man. All right, so kicking this off, obviously we have our 3 month chart. Really, the 3 month chart is not going to be helpful to us this time around. Now, why is that the case? Well, first of all, you see on the left, I have the government bond yield on the left, which it's not as accurate to read, but it's a far better chart to use to compare to the Dixie, especially. Um, and it's inverted to the bonds, by the way. ICT he likes using the bonds because the bonds is the tradable asset, and you can literally you can just dig down with the one chart and it's totally fine. But the yield, I personally like the yield a lot more because it's a lot closer to the marketplace than the actual bonds. Well, a lot closer. That's relative. So let's talk about the top down. The old relationship, which by the way no longer applies, is bonds, currencies, equities go in one direction, and commodities go in the other. Okay, so the bonds, currencies, and the equities on the long term they go tandem, and the commodities are inverted. ICT said that that relationship can break at any time, and all of this stuff can just fall apart and go to hell. Um, that has happened. This is one of those conditions. Okay. Um, Let me explain. So look at these two charts right here, just right now. What do you notice? Take take a moment to take in what you see on this chart right now. And in fact, let me show you the ZN. What do you notice right now? We have the biggest bear market that has ever hit the US debt market in history right here. Okay? And what has the Dixie done? What has the dollar index done this whole time? It has charged higher against it. So what does that mean? They developed an inverted relationship, and they developed a very sustained inverted relationship. I mean, look at this. This is several years of data right here. Actually, let me count. One, two, three, four, five, six, seven, eight. 8 candles. Let me do that math. I'm so mad that I can't even do math right now. So I need a calculator. Yes, that's 2 years of data. So for 2 entire years, the dollar index and the treasury note market have been opposed to each other. So what does that mean? What's really going on here? Well, to really understand this activity, this action, and what we're really looking at, we have to look at what the Dixie represents. The dollar index is not a measure of value of the US dollar. What the dollar index is it's essentially a price for a traded asset. Okay? So since the Dixie is a traded asset, excuse me, let me, well, I have my stream up so that I can hear whether or not I have sound issues and what kind of lag is going on. So excuse me, let me mute the sound because it's very distracting to me. So the dollar is a traded asset, and is priced in as a traded asset. It's not priced in as the asset's actual value, because really, do you believe that the dollar is worth what you see on the screen? Do you believe that its value is actually going up? Who in their right mind thinks that the dollar's value is actually going up? The dollar's value is a sustained downtrend by design. Mechanically, it's impossible for it to go higher. It's called inflation, and it is a property of a debt-backed currency. On the left, we have the backing of the currency. On the right, we have the currency itself. What is wrong? Okay, the left chart exists, and the right chart is going up. Okay, so that's not possible. That's an impossibility if the dollar index was representing the true value of the dollar. So, man, pisses me off. What's going on here? So what's really going on here? Why is the dollar? Why did the dollar index do this run up like this? Well, the treasury notes came down. The reason is because of how the central banks work, how they leverage their assets and how they leverage what they have, right? So a central bank seeks debt. Institutions will seek yield, and a central bank will seek debt. What is debt? Debt is for a currency, it's the bond, and actually the bonds represent most debt. They represent like housing debts. They represent like I think there's credit card debt bonds and things like that, and basically bonds represent debt. So the central bank is going to be interested in debts. Okay. The instrument of debt is the bond. Okay. The Dixie, especially the Dixie price, is based on the pool of currency traded by the central banks amongst each other. Okay? So what that means is that the Federal Reserve can buy up the dollar index. No, I'm sorry. That's not quite precise. Okay, so the central bank was buying up the dollar while at the same time the T-notes were dropping. Why were the T-notes dropping? Because the bond yields. Oh no, I have it right here, right? Is this the bond yield? Yes. Because the bond yields were increasing at the same time, right? So why would the demand for bonds go down? Where does demand for bonds come? Demand for bonds comes. Demand for existing bonds, I mean. Demand for new bonds, that's a little bit different. But demand for existing bonds come from seeing the yield drop, right? So if the yield is dropping, you're going to want old bonds because old bonds are going to have higher yield. And if the yield is going up, you're going to want new bonds or future bonds because future bonds are going to be higher yield, right? Because the market seeks yield. So if there's China, if there's Russia, if there's Iran, if there's the UK, maybe not the UK. They love the UK. These guys love the UK. Um, but like Japan and places like that. Everywhere else, other than the U.S., they're gonna see this move up, and they're gonna actually want to get out of bonds because they're gonna want to buy. Um, basically, they're gonna want to buy the top. Um, and the top is in yield, not as in the top as in the top of the bond market. No, nobody's trying to buy the top of the bond market. Um, but the bond market is printed this falling knife at the same time. This is very intentional, right? This is an action, okay? Increasing the bond or increasing the 10-year yield was a deliberate action, right? And as you can see, the demand for the bonds went down. Now this type of demand that I'm talking about is it's not like your typical supply and demand where it's like, oh, there's some supply and there's a buyer and there's all this stuff. Well, there's always a buyer and a seller in this. But as far as like holding and collecting goes, that's the type of demand that I'm talking about. Nobody is interested in doing that because the bond rates are growing up. What does this allow? This allows the central banks or somebody, anybody, maybe not the central banks, I don't know. Although, well, man, this stuff pisses me off. That's how I'm hedging myself. I'm saying I don't know if it's the central banks. That's that's a hedge. It counts as a hedge. Um, so these people, whoever's interested in buying bonds, whoever benefits from from owning debt, as in, and also the central banks, they seek debt. They love having debt and owning debt. They're going to be able to buy bonds because there's no demand for it. There's no demand for holding on to it. So they're going to be able to, as the bonds are passed around between each other, people, and traded around, the whoever is interested in buying the bonds and holding on to the bonds, possibly the central banks, maybe, they're going to be able to just grab the bonds out of circulation and collect and pull all those bonds, right? So that is what that deliberate action facilitates. That is not by accident. That's not a mistake. They knew exactly what they're doing when they did that. So and it happened over 2 years. That's that's another thing. That's another thing that was also deliberate. It's also a problem, which if there is oversight to any of this at all, if anyone thought that this mattered, the financial system at this point mattered to keep up, then that would not have happened either. There would be integrity in this, and they would not be able to just deliberately raise the yield like that and decrease the price like that. So, man, oh, I'm getting through it. I'm getting through this. All right, I'll be able to get through this. Anyway, so the old relationship is bonds, currencies, and equities go in one direction, and the commodities oppose that direction, right? The commodities are the hedge. We are entering into a hyperinflationary market, okay? There's no way for debt to go but up. There were two options for the entire market to do. It's either go up or go down, right? Not really sideways, not really much of anything else, right? The market shows up. So since the market shows up, we're in a hyperinflationary environment. There's no it was either hyperinflation or it was some form of uh, deflation or depression type of a thing. And I don't mean like the Great Depression type of a thing. We're actually in a depression right now. If you didn't know, we are in a depression. It's pretty fucking bad. The economy is dead. The real economy is dead. If you're using the numbers and you actually believe the numbers, get yourself checked for a head injury because that's the. Actually, no. I take that back. Even if you're using the numbers, you could see it clear as day. If you're interpreting the numbers the way that they, quote unquote, um, the the objects, the well, they're not people because people don't do what they do, and people don't have the sensibilities that they have. Um, then you're I don't know, man. Get yourself checked out. Get your head checked out. Make sure that your oxygen levels are okay. Make sure that you didn't get like a stroke or whatever, because there's something wrong there if you honestly believe that. So anyway, man, I can't even get through this paper, this page without ranting. So bonds, currencies, equities one way, commodities the other way, right? Then we have either two options. We can inflate or we can effectively deflate. Okay. Um, if we inflate, no, actually, if we deflate, what's going to end up happening is we're going to see a flight to bonds. What we would see is that the T notes, the futures price is going to pop, and it's just going to run higher, right? Which of course, that's going to happen regardless. Okay. How the market is going to respond to that is in the deflationary environment, the equities are going to go down, right? So so when the equities go down, that would be it. It would be a very nasty bear market if people were in um, anything that relies on like equities or things like that. They would get crushed. They would get absolutely annihilated. I'm talking maybe like 70%, something crazy, absolutely nuts. You would not see anything like it. Well, maybe only 40%, but it would be terrible. It would be the mother of all bear markets. The other option is the mother of all bull markets. Okay, so treasuries pop again, same thing that we would see in the deflationary market, and then bonds, equities, and commodities, all three of them will go up together. They will go hyperbolic. They'll be gone basically like crazy. Actually, I shouldn't say hyperbolic because they don't need to go like really nuts. They could just get very volatile, very powerful, very strong, very nuts, very ridiculous. Like think Weimar market. Weimar at the end, that was a hyperinflationary market. Venezuela was a hyperinflationary market, and what was going on in those? Bonds, equities, and commodities were all going crazy. Okay, they just flew right off the charts, right? So that appears to be unfortunately what we've done here, right? And man, I really did not want to see in the charts what we've seen so far. It's a little bit early in the year, so we still have a chance. There's still an opportunity for us to choose the other type, but I believe that we've chosen hyperinflation, right? And I believe the reason that we've chosen hyperinflation is hidden in this right here. So somebody with the sensibilities of a central bank, maybe not a central bank, brought these prices down deliberately by having the bond yield raised deliberately so that they could buy it. Okay? This is a manipulation. This is a Judas swing. All of this is a Judas swing. And the when you look at the Judas swing, when you've seen Judas swings and all that stuff, um, compared to the full move, they're like tiny, right? They're basically nothing. It's like a 1 to 3, 1 to 6, sometimes 1 to 10, like 1 to 20, like crazy. Um, the Judas swing is a small move, right? And it's a short duration. So if this is a small move of a short duration, what do you think the big move's gonna look like, right? It's gonna be crazy. It's gonna be absolutely nuts, whichever way that it does, right? Man, man, this stuff pisses me off. All right. So basically, the 3 month chart. I know I started on the 3 month chart, but this doesn't matter. At this point, we don't even need to look at the 3 month chart. There's not enough data. We might as well consider it just a clear, clean. There's no data on the chart right now. So yeah, let's just not worry about that. Okay. So how are we gonna track and monitor um, what's going on in the T notes and all this stuff? We're gonna do what we always do, right? We're gonna go into the daily chart, and we will not that, not that. By the way, I use that for literally these dividers. These dividers, they're like a lifesaver. I love them so much. It makes it so easy to find the week, the weekly profile and all that stuff. You know what? Let's do this with the yield. Okay. So the yield is going to have a high in March, April, and don't worry. Don't worry. This is going to be. I actually have a different way that we're going to analyze the charts as far as volatility goes and all that stuff. So we're not going to really dig in super tight into what the seasonals are doing because we don't need them. I'll show you what we're going to use instead. Okay. So we have between February and like April, actually February, March, April, Jan, February, March, April, May. Yeah, between March and May, we usually get a high. That can also be a low, and then we have a low. December, November, September. That's the only thing I don't like about this. The Lux Algo's seasonality chart. It's fantastic because you can study the seasonals of anything. The Lux Algo seasonality chart. You can go ahead and check that out. You can use this. And also the ICT kill zones and pivots. I like to turn everything off except for the week dividers, the month dividers, and the little day, the opening lines. I don't even use the opening lines for an opening price. I just like using this because it makes the days, the weeks, and the months very organized, very easy to just go through and find. So that's what's on my charts: the kill zones and pivots and the seasonality charts. And on this one, we have the CM time-based lines, and what I use that for is I use that for the indices, to block out the morning and the afternoon, and it just makes it really easy to look at and really easy to think, um, like ICT says, algorithmically, but really um, in terms of time-based ranges, right? So, that's what I got going on there. That's why. So, December, November, September, right? Yeah. So September, November, they usually have another high. January, February, July, August, August low. So March through May high. Okay. Could also be a low. August low. September, or no, October, November high. And that's the bullish seasonal. So if we're bullish, March through May, we're gonna have a high. Actually, let me write that down. I know, I just literally use it normally all the time, and I don't even think about it, and I still have to write it down. So March through May, high. March, April, May, June, July, August, low. September, October, November high. And in the Dixie, we should see the opposite. March, April, May. No, I'm sorry. Which one do we use? Yeah, okay. I'm sorry, I have my brain mixed up here. So in Dixie, we should see the same. Um, um, yield. Seasonals. Okay. And then the Dixie should be the same. February, March. Except it has more of a February, March thing going on. What's the green line, by the way? Green one. Okay, so it's this one. This one's a long term. The long term is more acceptable. Yeah, because see the short term moving higher. That's the that's some central banks hoarding U.S. dollars. They're taking U.S. dollars out of circulation between the central banks. That's not. That doesn't mean that they're taking it out of circulation. Period. That just means that they're taking it out of the pool of dollars that's traded. That's why that asset is going higher. So it's not really representative. It doesn't reflect um, what's going on in the actual dollar index. February, March. So I want to call it a March high. But we'll say February for March. January through March high, maybe. January, February, March, April, May, June, July, August, October, November, December. October through December. High. Okay. January, February, March. January through March. where's the lows in the chart? It's here, right? So September through October low. Is that fair? The thing is, I'm not sure. I'll call it a September through October low. Okay, Dixie. So that's Dixie's seasonal. Okay, and I honestly have no idea why all of its stuff is on here. We're gonna get that off of there. Yeah. All right, so that's the seasonals of bonds and the seasonals of Dixie, right? So we're gonna lean very, very, very heavily on the seasonals. We're gonna look in March and May. To see that the bonds actually make their low. And the reason that we want to see that happen in March and May and not really jump the gun before that is because things have changed. Dude, things are changing so dramatically, so fast that it's not even. It's I don't know, man. And then let's check the S&P. Oh, that's the Goldman Sachs Commodity Index, by the way. That's fine. Let's get all this crap off there. Yeah. Okay. January, February, March. So this is gonna be a January through March. It's either gonna be a March, April, or a January, March. I can't quite tell. January, February, March, April, May. January, February, March. Low. So it's gonna be the low. And then we get a high here. July, August, September. And the reason that we're mapping this out on such a large scale is once again because things are changing so dramatically. Okay, um, that dramatic change is number one is going to give us a pretty good ways to leverage this to our advantage. But on the other hand, it's also going to make it very, very difficult to read the marketplace based on intermarket analysis. Intermarket analysis will still be very helpful. It will still be very useful. The problem is it's not going to be nearly as powerful of a tool. And I don't know if we should even be using Dixie. I think that we should be switching to something more like gold or something else. Maybe just the bonds themselves. So the July through September high. October. September, October low. And then, well, there's not really a high in December. November's like this. Yeah. this is going to represent all the indices as far as our read goes right here. Excuse me, I'll be right back. I apologize for this. I know that I've taken a lot of your time, but I have to take a break really quick. Okay, thank you for your patience. So now we've outlined the seasonals of the indices, the Dixie, and the bond yields, okay? So March through May, we have a high in the bond yields. That means a low in the actual bonds themselves. August, we have a low in the yields, which is a high in the bonds. October through November, we have a high in the yields, and that means a low in the bonds, okay? So for Dixie, we have an October through December high. January through March, we have a high. And September through October, we have a low. For the indices, January through March, we have a low. July through September, we have a high. September through October, we have a low. And November through December, we have another potential high. So that is what we have as far as our seasonals go. And the commodities, they're typically actually no. Let's analyze the commodities really quick. We're not going to analyze every commodity, but we're going to go with like one or two potential commodities here. Okay. So December we have a low. December, January we have a low. This one actually looks like a very simple chart. I like this chart. December, January we have a low. And if my father would take me seriously, he would be in this right now. That he wants to he thinks that me participating in his life and giving him decision, well, not giving him decision, but trying to enrich his life as his son is. I don't know. I don't know what he's thinking. I just know that I can't help him. January, February, March, April, May. Should we take all of this? Should we include this high? I won't include this high. I know this is a little bit different. January, February, March. Yeah, March. That makes sense that there was spike during March. No, actually, no, I'm sorry. That makes sense that it was spike during January and February and then run up and spike down during March. And that's because that's spring. That's when spring starts, right? April, May, June. Here's what I'm going to do. I'm going to say April, May, and June we have a high. Okay? Does that make sense? Is that all right? January, February, March, April, May, June. Or we could do it like this: May, June, July. So April, May, June, or May, June, July. I don't want to take all. I don't want to take 4 months because taking 4 months is way too much. Um, let's see what the long period says. Okay, so the long period says May, June, July. So we're taking May, June, July. High. Okay. Man. So it's a very simple seasonal. What I want to do is I want to cross this with the Goldman Sachs Commodity Index is actually not quite what I'm interested in. This right here. Okay, so this is what's going to tell us that the spike is real. Okay. And we do have the same seasonal. January, February, March, April. So May through July was the right call. I apologize about my cough, by the way. That wasn't very professional of me to do that. But it just happens to me sometimes. So we can really see that May, June, July seasonal. We can see that it's coming. It's trying to front load into April for some reason now, and not really sure what's going on there. I don't think that that's a real shift. I don't think that that matters a whole lot. But I'm just gonna call commodities. I'm gonna call their seasonal. So December through January we're gonna have a low. May through July we're gonna have a high. All right. That makes sense. Sound good? So that's it for seasonals. We're not going to do that usual thing where we're just kind of dig through all of the seasonals. And in fact, we're not even going to go through the intermarket relationships. Now, why would we not do that? Because of the thing that I told you. Because everything's changed, right? What is the relationship in this hyperinflationary market that we believe we're in? And I'm going to say I believe it just to hedge myself. See, I am quite, in my mind, I have to say, I am certain that we are in a hyperinflationary condition. Why is that the case? Because a central bank has two things that is really capable of doing. It can buy debt, and it can regulate the dollar index. Okay, those are its two mechanisms that it's capable of doing to really influence prices and really influence things like that, right? And influence the value of the dollar. They can actually influence the true value of the dollar, not just the dollar index, right? Believe it or not. But what do they want to do with the value of the dollar? Do they want it to go down? If the value of the dollar goes down, then they actually lose power, and they lose a lot of their ability to well, they lose a lot of their ability to do certain things with certain how should I put this? I'm not trying to get in hot water, so I won't put it anyway. But their deflation is bad for them. Let's put it that way, right? It's extremely bad for them. It's almost an existential danger to them. So they don't want to see any deflation. They want to see inflation. And the more inflation happens, and the faster that inflation happens, as long as they don't just impoverish everyone, period, they can impoverish most of the world, by the way, and they can kill millions of their countrymen, and they will be just fine. As long as they don't impoverish themselves, which is going to be quite, it's going to be damn near impossible because they basically control money. That's their whole thing. That's their whole shtick. Um, they're basically immune to inflation. So inflation is the key. It's in my opinion, in the certainty that is inside my mind alone. Um, they're going to want to inflate the dollar, right? And there are steps displayed in the charts, shown blatantly, just shown in the charts. Um, Visually, I have to put the bond, by the way. But there are steps just blatantly printed in the charts to accomplish that end, to help them do that, right? And now, why on earth would they want to collect up bonds? Why would that help them? And the reason is because if they own the debt, then the inflation doesn't do anything like benefit China or benefit some other country or benefit something um, where central banks are not king, right? So that's why. Um, well, that's why. So analyzing these on the daily chart or lower, that's really the best that we can do. And in fact, we don't really want to analyze this on the daily chart. We don't really want to be looking at bonds all that much until the dust settles because this is just a start. This is just the start of what they're trying to do. Are they turning around? Yes. Is it going to be a breakneck? Is it going to be a breakneck, just rip? Yeah, it will be. However, that's not really readable to us because what's the basis of our read? It's the ICT stuff. We have to see the break of structure. We have to see all that kind of stuff. Everything that makes it bullish. If we don't have that, we need to have our seasonal behind us, which is it? Is it March or May? Is it March, April, or May? No, it's not, right? It's February, right? So it's too early for us to go in and start analyzing the Treasury note. It's because we haven't met any of the criteria for starting to analyze it for a turnaround. As far as the Dixie goes, would I use that as a benchmark for anything? I'm not going to use that as a benchmark for anything because the thing is, if hyperinflation happens and Dixie were to follow the actual economic principle of inflation, it would just go straight down like a rock. The fact that it's possible for it to go up shows the actual nature of the dollar index. The dollar index does not represent the value of the dollar, and so it can go up or down, however it pleases, depending on who's pushing it around, right? Will the currency go higher or will it go lower? I really don't know. Um, Obviously, the true value of the currency is going to go down. It's going to fall like a rock, like it's been falling like a rock, like crazy. And no, I don't mean Iraq. I mean Iraq. So, but man, that stuff is crazy. So really, what's the game plan? my game plan is be long. Try to be long. Try to get longer, and just by the way, I'll clear off all these. I used these charts, so I'm gonna take the drawings off of these. We're gonna do those up. Don't worry. It's cool. Basically, the expectation that I have is they're gonna just keep buying the market. So there's not really anything else that can be said about this. Now, are the commodities gonna be moving up also? Um, let's go into the commodities that matter. There's oil, right? So is oil going to be moving up? I think oil is finding a bottom. Um, and I know it's like, oh, I think, all that kind of stuff. The thing is, we're in brand new territory, right? Um, is it time right now to start calling lows? Actually, December to January. Yes, it is time to call a low in commodities. So oil can make a low right here, if it wants to. In fact, let's go on the daily chart and see what it did. I expect it to find support. I don't really expect it to sweep out a whole lot. So, please don't take that as financial advice. Please don't take that as trade advice. Please don't take that as anything other than just that's my opinion on what crude oil is going to do. I do not want to see it moving down. I know that it's possible for it to do downward pointing price action. It's just there's a very ugly condition that I really don't want to see out of the markets. I wouldn't participate in this in anything other than just a very, very long term position hold. And by that, I don't mean the 3 months that ICT suggests. I mean a real position. Like, you're holding it, right? Right? Forex, yeah. And that's where I put my gold. We're gonna remove these drawings. So as we can see, gold, it kind of got let loose, but it wasn't really able to be free. There's no freedom in gold right now. It's mostly just sideways. Remember, December through January low. So it should be up from here, more or less. But obviously it can flirt with trying to make a low anytime that it wants, especially in gold, because gold just kind of does what it wants. Oil just kind of does what it wants too. Oil is very, very, very heavily manipulated, almost as manipulated as gold. Gold is a little bit more. No. Is gold more manipulated than oil? No, they're about equal. They're both very, very bad. ICT calls them event-driven markets. That just means that they pop and do crazy, crazy weird things when there's an event, and then they just kind of go quiet again and face rip everyone all the time. So I don't like gold. I don't like oil as a tradable asset, but I do like them as investment pieces. So that's my 2 cents on them. And honestly, if you were to get gold as an investment piece, get it physical. Don't get this paper crap, electronic crap, any of that stuff like that. Because did you know, if you go in the CME and you say, hey, I want gold, I want a gold contract, they'll give you a gold contract, right? But that gold contract is not deliverable. They don't have to give you gold. Do Do you know what they have to do? They have to give you the dollar amount equal to the value of the gold that you were trying to purchase, right? Nobody is getting um, gold futures contracts with the intent of anything other than to get actual gold, right? But they're not giving anyone gold. So why would you be interested in these derivatives and be interested in these assets and interested in all this kinds of stuff that are electronic when ultimately they don't even give you that the asset is not there, it's not real, right? If it was real, it would be deliverable, they would be able to give it to you, right? But it was like, oh, trust us, we have gold, also you can't have it even though you paid for it and bought it. um, it's a little bit dodgy, right? So don't get real gold, right? So anyway, do we want to see the forex? We could look at the forex. Get that out of here. Remove drawings. So with the forex, we're gonna be looking at our seasonals as well. I know I forgot about it. January, February, March, April, May, June. So May and June. May, June, March. Okay. And this should be pretty universal. Really, this should actually be dependent on the interest rates, which we're going to look at the interest rates. The interest rate is the Federal Reserve borrowing rate. It's the bread and butter of a carry trade. It's the whole idea behind the mechanics of that. What is a carry trade? Um, well, it's the Miss Nakatomi trade. So basically, the idea behind the Miss Nakatomi trade is the Japanese yen has a very low interest rate. So what these Miss Nakatomis, which is basically Nakatomi is a very common name in Japan, and it's basically just referring to housewives taking care of their stuff and doing their thing. What they would do is they would buy um, other currencies because other central banks they had a higher borrowing rate than Japan, right? And the higher rates meant that they were able to earn interest on that trade that they were making. So they were it's pretty degenerate trade, and it's a pretty degenerate idea. But basically, what was going on was they were leveraging the interest rate. They were seeking yield, and that yield was giving them a return on their investment, right? So that's the idea behind the Miss Nakatomi trade, which is the carry trade, by the way. Um, and the reason it's called the other currency, you're carrying that other currency, and because you're carrying that other currency, it's accruing interest in the form of the central bank interest rate is giving you a return, right? Where's the low? Was that September, November low? Yeah, I can't see a high. I can't see where the high is. January? January high, I guess. Is it December to January? I don't know. Yeah, that confirms January, February, March, April, May. I don't want to read that. Okay, so I'm just not gonna do these. And in fact, it's just taking time away from the read, which the read, that's basically the bread and butter. That's what everyone's here for. Who's not here, right? Ooh. Let me check something really quick. Oh, let me check to make sure my mic is on. Yes, it is on. Okay. 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 All right. So now we know what our seasonal tendency is going to be, right? So we know the times that we're going to see the biggest institutional players come into the market and buy the market or sell the market. What I want to do is take you to this S&P chart. Let's pull this up. Let's find. We should do that in the other one. Huh? Yeah, let's do that in this one. Yeah, because now we can see the month dividers, right? Okay, and we're gonna all click, and we're gonna lock this because that's gonna be a pain. All right. I'm gonna take a little break. Take a little break from thinking about this shit, thinking about how slimy and shitty and fucked up this whole system is that they've come up with to um, to accomplish all that stuff. And I will be. Mm, you know what? I'll be back in about 10 minutes. Okay, is that fair? Be back in 10 minutes. Okay, thank you for your patience. I'm back. All right, so what are we doing with this chart? This chart is very special because it really cuts to the heart of the idea of what a premium and a discount is. I saw a video once of a person who said he was smart money, and he actually was smart money, by the way. He wasn't really, shouldn't say a lot about him. But one of the things he said was that VWAP is a very powerful measure, and the reason is because um, people are going to hand their orders off to a market maker, and they're going to tell the market maker, I want you to get me in below VWAP, or I want you to sell short above VWAP, or get me out of the position above VWAP, wherever. And that doesn't really matter. So VWAP is a very powerful measure for people to place and take orders off of around. So what other kinds of measures are there that are like VWAP? That are kind of sort of like if you were handing orders to a market maker, you would say, get me in above this level, or get me in below this level. Right? Look, what other measures are like that? Well, these lines right here. If you'll take a look, what I have depicted here is I have a big figure and I have a mid figure. Then I have a big figure, then I have a mid figure, okay? So the big figures in particular are very powerful, and by big figured, I actually picked the S&P very deliberately for this, and it's because it's very easy to do this measure on. It's a very simple chart to read and do these kinds of measures on. For other charts, we won't go over them tonight. We won't be talking about how to put these lines on the chart, and really this is already more than I was planning on putting out there, but I felt like cutting this whole session short, so I did this because this is the easiest way that I know of, and really it's the most precise way. Well, not precise as in like price wise, but precise as in knowing which direction that we're going to be moving, and kind of knowing what's going to happen. That's the precision that I'm talking about, right? Where you're not going to know exactly the price based on this. There are ways. We're actually going to go into a way, but mostly you're not going to know, right? So let's say this big figure. We're going to take. Let's say that we want to buy below 4,800. Okay. So we take an order, we hand it to the market maker, and we say, get me in below 4,800. Okay. And the market maker says, okay, no problem. All right. Where is he going to place the order? There are two measures. Okay. No. Two measures? No, for the purposes of this, for the purposes of the big picture, there's one measure. There's really two measures for the lower order activities, but for these purposes, there's one measure. See this big figure? Where's the lower limit? The next big figure. Okay. So between here and here, well, we end up getting a dealing range, but between here and here is essentially discount. Okay, it's cheap. Why is it cheap? Because you said I want below 4,800, so that means that one tick below 4,800 is cheap. That's discount, right? So they drew. So yeah, and above 4,800 is going to be premium. Like, let's say I'm trying to sell short, and I say, get me in above 4,800. It can be 4,825, right? And that's still above 4,800. So any level above this is expensive, right? However, where's the limit? 4,900. Okay. Sorry, I thought I'd show this off the top of the cuff, so I didn't really write too many notes. And in fact, I don't keep a lot of notes around about this one. And by the way, the lingo, it's not like premium and discount. It's not like they're trying to buy. Well, there's no such thing as premium and discount. That's not real. That's a made up term, just like fair value. But it's fitting. It fits what's going on here, right? Because below 4,800 they're trying to buy, right? Above 4,800 they're trying to sell, and it's not that the buyers win. It's just that the buyers are right, and while it goes up higher, right? And then we move up higher. Um, Above 4,900 we're trying to sell. Below 4,900 we're trying to buy. And then it keeps going, right? So that's the rationality behind premium and discount. See, did I miss anything on the big picture? No, I did not miss anything on the big picture. And then if you study ICT, you see the old low to the left, you see the fair value gap to the left, and all that stuff. And ICT, he uses those things to direct your eyes. It's not that completely perfectly precise. Well, it can be. It can be. And in fact, it often is. But that's the fact that there's, oh, this fair value gap. There's a fair value gap, guys. That's not why price is moving there. Not precisely why price is moving there. It's not even the fact that price is inefficiently delivered there. It's not because remember we're in discount. And if we're going higher, if we're in discount and we're going higher, then what's going to happen? We're going to want to print a breakaway gap here, right? So that kind of blows around, that blows out of the water the idea that filling these in is actually filling in some kind of an inefficiency. It's, how should I put this? Well, these are taking actual stop orders, right? But when we reach into here, this whole range is actually buyers, if that makes any sense. Now, why is this whole range buyers? Is because once we punch higher, and through all of this, it takes a lot of conviction. I don't want to say buying strength because that's not quite true either. But it takes a lot of conviction to really punch higher and move higher based on that, right? So that's really what's going on here. This high that we see right here, this has a lot more influence. Let me put array. Let me drop array right there. And no, I don't mean array apps. What's the low on this? Yeah, 4702 and the high is 4701.75. I would have liked to see that high actually tagged, because that's really the principle. That's the idea behind this. But that actually has a lot more impact on where price is going to stop than this full range does. Because let me get rid of that. Because it's not like it's sucking it in. It's not like it's actually sucking it down. That's not really what's going on. It's more like it's just trawling for liquidity, because there are people trying to buy through this, and it's coming down and it's filling, right? Um, so it's not like it's not like it's trying to cover this up. It's not like it's trying to do that, and that's not the real intent. It's more like it's just coming down into that, right? And filling orders, right? Did I miss anything about this? Let me see. So there's nobody here to really ask questions. But basically, let me recap. Um, the first thing that you want to do here with this principle is you want to find big figures. Like with this one, we have 4,700, 4,800, and 4,900 up here. And then between 4,800 and 4,900, that's a premium. And also between 4,800 and 4,700, that's a discount. You're going to be looking, if you're bullish, between 4,800 and 4,700, you want to see buying. Does that put any light bulbs in anybody's head? I know nobody's paying attention. Nobody's here to ask questions, but I would like to know after the fact in the comments. If we're bearish between 4,800 and 4,900, we want to see selling. And if we're indifferent, we want to see between 4,900 and 4,800, we want to see selling. And between 4,800 and 4,700, we want to see buying. Okay. Now this seems like a very low resolution. This seems very big picture of being, and it doesn't seem like it's going to be very impactful on price. But this actually does have a huge, huge, huge impact on intraday price action. These lines, you're going to see a massive impact on intraday price action. Now, what happens if we actually go up above 4,900 and we poke through 4,900? That could be. Let me tell you something, okay? Until we reach 4,900 and we go above 4,900, we are not overbought. Premium is not overbought. Overbought means it's too expensive, and so everyone's gonna boom ape in and just sell right into that, and they want to see that price go down because they think that it's Christmas. Between 4,900 and 4,800, that is not the case. This is expensive, but it's not too expensive. Okay, selling can happen in here, but it just doesn't matter, right? It's not like we're overbought, right? This just means we're bought normally. Same thing goes with oversold, right? We are not oversold until we go one tick under 4,700. Right where I am, 46.9950, that is oversold. 4,700 is not oversold, okay? It's just normally in a position to be bought, right? So, what happens once we break above 4,900 decisively, right? So once we do this, we end up in a condition where the whole idea shifts. The whole paradigm, the whole the whole everything shifts to a higher level. Okay. So 4,800 was just the big figure that we were interested in, right? I know ICT, he calls it equilibrium and all that stuff, and that's a way of simplifying. This is not equilibrium. This is This is the big figure of interest. This is the big figure that we're working, right? Once we go higher, 4,900 is now the big figure we're interested in. So what does that mean? We look lower, we see 4,800, right? This is our lower limit. Below 4,800 is oversold. Between 4,900 and 4,800, that's discount, right? If we go above 4,900, what's the next big figure above? 5,000. Between 4,900 and 5,000, that's premium. Above 5,000, that's overbought, okay? If we go into overbought, or if we go into oversold, we want to see it, boom, reverse immediately, basically. We almost don't want, the daily candle can kind of fudge just a little bit with this close into the overbought territory, but we don't want to see a whole lot of overlap with the wicks. Well, no, we can see tons of overlap with the wicks. We can see like 10 candles of overlap with the wicks. It can get ridiculous, but we don't want to see a whole lot of overlap with the bodies with the 5,000, right? We want to see bodies stay under that mostly, right? So remember when ICT said his rules about the gaps? Those predominantly they work with these levels, okay? They work with this concept of premium and discount. They work with this concept of overbought and oversold. They work with this concept of how to algorithmically map out what we have. And incidentally, this is also a tool, which he didn't tell you about this, but he said that he didn't have any tools. He lied, because he has this tool. He does. In fact, he has it on his channel. He put it on his channel, by the way. This is one of the tools that lets you judge price action that's not in the charts yet. That's in uncharted territory, okay? So, this is chamomile tea, by the way. Put some honey in it. Very nice. So when we go on the 4-hour chart, we're gonna start being able to work with the 50 levels, with the mid figures, right? Because so far I've only talked about the big figures. The big figures, they're already giving you massive, massive amounts of information about what's going on in the charts. Unbelievable. Like, if you didn't understand what I told you when I showed you that between 4,900 and 5,000 is premium and expect selling, between 4,900 and 4,800 is discount, expect buying, then you're gonna need to sit here and work with a concept, which I'm not gonna go over the concept again on this channel ever. Not on this channel anyway. Not. So I'm thinking maybe when the channel is big enough, I could put it behind a paywall or something. But this is the big boy stuff. This is not. Well, it's the big boy stuff, and I'm gonna show you some work with it. Okay. When we go down to 4-hour, we'll start to see some of the uses of the mid figures. Okay. So between 4,900 and 4,850, what do you see? I see a premium and a discount. A very short-term premium and a discount. It's not as short-term as these red lines, which they're more of like implied premium discount type levels. The 48.75, 49.25, those ones are real. Those ones are actually of interest. They're actually turning price. The the mid figures are also real. They're actually turning price, but this 0.25, the 0.75 that I have on it, they're more like when ICT talks about like gaps and things like that, and on the 1 minute chart and 5 minute chart and 15 minute chart, things like that. Those aren't actually there. They're more like phantoms that of this, okay? Because price is fractal, and there's almost an engine in price that causes it to move in a certain way that makes it do certain things. So it's not intentionally printing gaps. It's not intentionally doing anything that you would normally think of. What's the word? Oh, let me track this. Let me make this easier to see, right? So we have our premium here, and we have our discount here. Okay. And let's see if we can make those visible. No, yellow is already. Oh, it's gonna be hard to make those visible, huh? Okay. Let me do a box. Okay. Is a box okay? A box should be okay. 4900 to 4850. Let me do this. It's gonna be red, right? Let's reduce the opacity so that way you can see it, but it's not overbearing. 4900, right? Yeah, let's do 49 big figure and 4850. There we go. And then it's gonna be 49 big figure and 4950. And this is gonna be premium. Okay. We'll do that one in blue. Should we do it in green? Let's do it in blue. Blue's a better color. It's a nicer color for this chart. That's very important to have nice colors on your chart. That's why I picked the colors that I had, by the way. So these candlestick colors, the story behind them, it's not to have just a cool candlestick color for like branding and stuff like that. But it's to help control emotions. Okay. So because green and red, they're the two strongest, well, they're the two colors that evoke the strongest emotions in a human being. Okay. So 45 mid figure. 49 big figure. Right, so because they're the two strongest colors that evoke emotion in a human being. So I wanted to change them. So the up candle is it's a yellow orange. So it's like that's almost like a warm color. And the down candle is the blue. It's the teal blue, and that's like a sort of a cool color, and it really takes the charged emotion of the green, which is like it's like go. The green is like, you know, you're really getting it. You're really getting some, and the red is like it's red. It's the color of blood, right? That's things are melting down. Things are going wrong, and you're out of your mind, right? So you don't really want those colors in your charts, and I didn't want those colors in my charts. So I chose different colors which conveyed the same idea. I don't know why. I don't know why I was attached to the idea of it, but I was attached to the idea of it. But they didn't have the emotional attachment. Right? So it reminds me of something that Tom Huger said. He's like, we don't want to be like, oh my gosh, it's going up. Oh my gosh, it's going down. And he was more like, oh, you want to look at you want to look at how a candle is developing, and you want to say, oh, there's there's not a lot of buyers up there, are there? And it's just not really all that emotional. It's more like just kind of a there's a discovery going on, and it's calm. It's nice. Anyway, what I'm trying to show you here. Uh, let's see. Is there a better example? Uh, I want to show you a weekly profile. You know what? We can use this. This is good as a weekly profile. So, oh my back. Drop a vertical line just so that way you can see it. There we go. I hope that's clear. I hope that's clear enough to see. So, um, first and foremost, I don't want to draw your attention to the price action to the left. If you follow our ICT, then it's really obvious that we have equal lows here. We have these descending lows here, or actually ascending lows here. The trend line lows, right? Which were all taken out, right? In discount. My first question is, hang on. Okay, thank you for your patience again, all zero of you. So, basically what I'm trying to show you is a premium and a discount idea. So, pick this up. Let me have some of my chamomile tea. Turn that off. That guy's an idiot. So what we have here is, irrespective of whatever the chart is printed, or whatever the chart is printing, we have a premium and a discount idea, okay? The chart does not have to print inside of this at all, anything. There has to be no, well, almost said there has to be no features. No, 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 no. There can be no features inside of this chart. There can be nothing. There can be nothing preceding it. There can be nothing after it. Well, there's going to be something after it based on the principle that we're going to talk about. But the chart itself does not need to print. It doesn't need to populate. What really matters is that we have this 49 big figure. Okay. Somebody comes in, they hand their orders to a market maker, and they say, "Get me in below 4,900." Just like that guy who comes in and he says, "Get me in below VWAP," right? But he's going to give him a number, 4,900, right? 49 big figure. So what the market maker is going to do is either, well, they don't drive price down. That's illegal. But basically that's what they do. Price is going to come down all by itself without any help. Hint, hint, nudge, nudge, wink, wink. And they're going to buy below 4,900. So we're going to see buying activities happen below 4,900. And we're going to highlight what the buying looks like. Okay? Buying is a very specific way that the chart is going to behave. There are very specific levels that the chart is going to be treating in a very specific way. And that's how you're going to identify buying. But we're not there yet, okay? We come under 4,900, now we're in discount, okay? We buy these, and then we were out, okay? What days are represented here? Let's actually go in here, because this will show us the days. At the day open. Say okay. So is that a little bit clearer? I can't see the Monday. There's a Monday open as well, and the Tuesday. 18. Was this a holiday? No, right? So I don't know what this thing's problem is. Oh, it's because it's all not set up yet. Let me set this up really quick. Uh, 3. Does that work? Yes. Okay. So this is set up. This is much better. So we have a Monday. We drive up. Tuesday. We're basically buying. No, I'm sorry. We're not buying. That's actually insane. That's stupid. No, we actually sold on Tuesday, and I'm going to show you the footprints of that. I'm going to show you why that was the case. Wednesday we sold some more into, and by the way, that's how they move price. We made a Tuesday high, and then we reversed down, and we bought. Okay? When did we buy? On Thursday. Okay? So this is Wednesday to Thursday. All of this price action is this Thursday. So we bought. We went higher, and then we bought some more. Okay? We inverted premium and discount, and we bought some more. Right? Where did you hear those principles before? Premium, discount, inverting. That's basically from the market maker buy model, market maker sell model. However, at the same time, that was also in one of ICT's live streams where he was talking about inversion fair value gaps. He was talking about when you're passing that same gap through the downside, or when price moves like down, and then you move up and pass through that same gap, you're going to see almost an inversion effect where it's just kind of hook and hook and hook and just go higher, right? So that's a property of one of those market maker models, that the inversion effect, right? It's kind of weird. I'm not really sure why we see that here. No, actually makes a lot of sense seeing that here. Why? Because we're reaching for 5,000, right? So this big figure up here is very, very potent draw. We're probably going to want to reach up into that. I don't know if we're going to want to poke and reject. I have a strong suspicion that we're just going to smash it out, and we're just going to keep running. And it's because of what I was telling you about the central banks and their MO. They want this. They want this is a property of a hyperinflation market, which every time that we have hyperinflation, like Venezuela and the Weimar Republic, it just runs, right? But well, yeah, the market just runs, and it just flies off the charts like crazy, and it's just never seen again. And basically, they just turn off trading because there's no point anymore. And it never crashes until well, nobody can participate in the crash basically because they just turn off trading. So that's what I'm expecting. I'm expecting us to punch through this, and I'm expecting this inversion that we see. What kind of inversion is this? Well, we bought under 49 big figure, and then we're reaching higher. This is part of the property of this type of thing, right? So let me show you. Let me take my blue box, if I can. Here it is. So one of the levels is going to be 5 big figure. So 50 big figure. 5,000, right? Yeah. Yeah, that's the one. And the other level is not going to be 4,900. It's going to be 5,100. Okay. Then down here, we're going to have 4,900 and 50 big figure. Okay. There you go. So if we're in discount right now, what are you going to expect? Buying. What are we getting right now? Buying. Okay. So we're not getting a whole lot of selling. There's no selling pressure. There is no selling in this run whatsoever. And I really don't expect there to be selling in this run at all. Where would the selling be if there was going to be any? Here. Okay. Or here. Or here. We'll see if we get selling Monday. This is going to be confirmed or denied based on what happens on Monday. But I very highly suspect that we're just going to find more reasons to buy. And once we find more reasons to buy, then it's just going to keep running, and it's going to run through these levels, and we're going to be in premium. Okay. This will be premium. This will be discount. Okay. I suspect that this is already discount and this is premium. So yeah, that's my expectation. But anyway, the weekly profile. Why did I bring that up, right? That's probably what you're thinking. Why did I bring up? Why did I mention the weekly profile if I was just going to kind of go off on the rails and talk about this? Let me show you. 50. There we go. This is going to be 4,900 and 900 and 4,950. We'll say that. This is a more short-term premium and discount, okay? So remember when I said that when we're overbought, we're gonna have a really tough time doing much of anything. We don't want to see the bodies peak out like we see here. Seeing these bodies peak out, that was not a good sign. However, what the wicks are doing are exactly what you would expect to see from an overbought condition, a true overbought condition. Right? As soon as we reach up, it's selling, right? And as soon as we reach up, we see selling, right? Why did I pick the mid-figure, big figure? Mid-figure, big figure. The answer to this question is because this is more of a short. The weekly profile is a short-term thing, so we're going to use short-term levels. Mid figures are for short-term premium discount ideas. Okay, and intraday and during consolidations, we can even use these 25 levels. Yeah, 25, 75 levels, or we can even use these levels that split. We can use these quarter levels. Those will often hold price when there's no need for it to go anywhere or do much of anything, right? So these are not really useful typically. Well, they have a use. They frame our price. They're more redundant than anything else when price action is active and actually moving around and doing something active. But price can actually just kind of settle on those levels, and it can kind of settle on the mid levels. What should I say about them? Price likes to settle on those levels when it has nothing to do. That's what I should say about them. So as long as it has something to do, as long as it's moving around, these levels aren't really going to matter. Like I just said, there is a use for them as some very short term things that give you information, but they're not really all that important at all. It's almost not even important to know them or that they exist. They don't matter. Why? Because there's other mechanisms that we're actually going to look at in price, which push the market around a whole lot better. And honestly, I think that we should start digging into exactly what that is. No, I don't want the 3 month. I'm sorry. I want the 1 month. The 1 month. Okay. So remember what I said. There's the month. There's the month. All right, so we're just gonna pretend this candle doesn't exist. But remember what I said about implied fair value. In fact, here's what we're gonna do. We're gonna do this. We're gonna set up these candles with all of the implied fair value levels. No, I'm sorry, implied fair value. No, implied fair value, it's more like what ICT talks about. That's what implied fair value is. No. Dang, I'm getting my own terms mixed up, and I made them up. Holy crap, holy cow. 1, 2, 3. This one as well? Yes. And we're actually going to look at all of this price action, don't worry. So I'm not wasting my time. Yeah, but remember what I said about mechanical fair value. Essentially, it's a term that I give these find that. And we go on the weekly, right? And on the weekly, it's like the blue ones. I'm gonna use the blue ones. It's a busy chart, right? Well, that's all right. We're gonna make sense of it. We're real men. And then there's 2 of these. We're gonna shuffle that around, by the way. That's why we're putting 2 of these. We'll go on the daily chart. Busy chart. Man. Man, I wish we didn't need all of these. There's way too much crap on this chart, and that's why I don't like. Well, also to hide it from you. That's also a no-brainer. That's the other reason that I don't like putting these on the charts, because it's the most potent thing that I got, right? But we're actually gonna go on the 15-minute. So remember what I said about buying, and no, I'm sorry. Remember what I said about the 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 mechanical fair value, yeah. So if we go on the 15-minute chart and we take a look, we're gonna see that we technically bought here, okay, and then we came up. On the daily. I know this day was a little bit weird, right? We also have a 5-day look back. 1, 2, 3, 4, 5. Okay. So inside of this, we can actually look for levels. This is more advanced use of this. I don't like doing it myself personally, because usually it doesn't bear a lot of fruit. Usually it's not really that interesting, and it doesn't do anything all that cool. But in this case, it kind of did. It was a little cool. We had one more level, right? I know, cherry picking literally exactly the level, right? And that's why this look back is sometimes a pain in the ass. Um, I did not want to see it just kind of come down, tap that a little bit. I want to see it go down a little bit further into this discount level. Yesterday, well, yesterday, yeah, yesterday. Yesterday, let me check the clock. Oh, it's Sunday already. Ooh, 2 days ago. But as you can see, this is still a level, right? I know that I had to work it in. I had to cherry pick it and do all that kind of stuff. But this is still a mechanical fair value level. So that's a big deal. This is also non-farm payroll, by the way. Was it? Which news release was that? Because this was non-farm payroll. It wasn't JPAL. The JPAL was Wednesday. This one was. Let me check actually. I know I had Forex Factory all set up for what I was doing. Yeah, Thursday to Saturday. That's fine. Doesn't matter. Unemployment claims at 8:30. And with all the actual powerful news that we were tracking, I actually did not see that one. Hmm. But this is another version of discount, an even shorter term version of it. No, a shorter term version of it. No, 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 no. So, um, what was I about to say? We have another premium and discount level. This is between here and here. Usually, when you see those, it's only going to last a session or maybe even a day. But it's not really going to define a whole day. Um, Weekly ranges they're typically going to include some kind of a big figure work or some kind of a mid figure work. But they're not going to just kind of hang out treating this lower area as premium as discount and this upper area as premium. Although ICT he does talk about that sometimes. Well, sometimes. Sometimes. No, he did talk about it. I think it was in month 6 somewhere, um, where he talks about consolidations. Let me get these fucking levels off of this. There you go. I'll, much cleaner, just much better, all by itself already. Um, but ICT he talks about this consolidations and things like that. And when he talks about consolidation, he says there is premium and then there's premium and there's discount and then there's discount, like real discount. And what he did was he divided it up into 4 um, quadrants. And this is in quarters theory. This is not really. This is not entirely related to it. But what it is it's places to look. It's places to put your eyes. So when we're up here, um, there are some activities, some pressures that have to do with the interaction between premium and discount, where um, it's almost like they meld together, but they're not really. Uh, what's the word? It's not as premium, basically. It's still a premium, but it's not as high value of a premium as if we were to get up here. So like if I say I want to sell short at 4,900, um, then you want to get me in above 49 big figure, right? That 1/4 above 49 big figure does satisfy my requirement. But if you can get it up here, then you're a really good market maker, and I'm gonna come to you any day, all the time. I'm gonna love you. So what they're gonna try to do is they're gonna try to get me filled as premium as they possibly can. Or if I want to take a long, they're gonna try to get me as discount as they possibly can. And so as you can see, we dug inside of this and the 48.75. We dug underneath that. We bought, right? So this is a previous week's low and also a previous week's open. We came through that and we actually bought that. Okay. Now what's happening there is we drive through the level and it actually trips. Um, it's not even passive orders. It's an algorithmic level that is going to trip things like dark pools, like was that iceberg orders and all that kind of stuff, and it's just gonna do these equity dumps at these levels, which is why they're fair value. That's what makes them fair value. They're not actually fair value as in value that is fair. Um, they're just good places to put orders and or to dump orders basically. So they dump orders there, and so we bought that, and then we bought that again, and I actually expected us to buy it again. We didn't. We just kind of took discount and then rocketed off on some kind of not really news. I think this was actually Janet Yellen announcing that they were breaking the and Janet Yellen. Fucking Janet Yellen. Anyway, that's the story behind that. It's just it's it's price action. I don't know what we want. Oh, let's not drift that. Yeah, let's leave that where that is. So yeah, basically you're looking for these lines, and you want to see these lines which are anchored on the monthly candles, the last 3 monthly candles, the last 3 week, the last four, technically the last four weekly candles, but you can shorten it to one, or the last 5 daily candles, which you can shorten to one. Okay. I don't like putting these extra levels, even though they're correct, even though they count, even though they work, but I don't like putting them on the charts because it just makes them so dirty. And if you put those on the charts in back testing, um, is it really realistic that you're gonna select the correct candles and do the correct things? Not really, unless you just put all of the discount levels in there. Um, it's it's not right. That, it's not happening, right? You're not picking the right levels. Okay. So let me see if I can show you some more premium and discount, how premium and discount works. And by the way, this works with the daily profile. Uh, it, it works with the weekly profile um, because the way that the way that the chart moves up is it moves up by buying. Okay. The way that the chart moves down is it moves down by selling, and then it moves up again by buying again. Or it moves up by buying, it moves down by selling, and then it does um, nothing. Obviously, it's not doing nothing when it's doing nothing, but it has no motive. Okay. Um, when the market has no motive, it's let me move this. Yeah, this will shed some light on what happened on the JPEL. By the way, I'm gonna put this level into the charts, if that's all right. There we go. 49.05, 25. There we go. Delete that. So those are our weekly levels, right? Minute. I know, very, very busy chart. 15 length. What the hell? Visibility on a minute chart. Yes. Okay, there we go. Perfect, perfect, perfect. So now we can see the different days. The open doesn't really matter. I don't want us to focus on the open right now. Obviously, ICT's channel covers the open, the which is the 1900 open. That's the midnight GMT, the midnight New York, the 8:30 New York. All of those opens, they're very good material to watch and see and understand. But I want to show you what's really going on here. Okay, so see this was the day that JPEL was going to come up and open his mouth and be absolutely fucking deplorable, say a bunch of fucking bullshit out of his mouth that nobody believes who has a fucking brain. Um, you can probably tell that it pisses me off. So, basically, what happened here early in the day, the very first thing that happened, we interacted with um, these areas of mechanical fair value, right? Let's go ahead and zoom in. What happens once we knock off? Not much of anything, right? We chop. And then we go up, we have another interaction, another sell, okay? How do we know that it's selling? Once we got underneath, well, yeah, once we get underneath the order block, we keep going down. That's how we know it's a selling. We move away from it to the downside, and we don't move higher, right? So we drive up again, we come back underneath, break the order block, we move lower. So there's more selling, right? Do we ever buy at this level? No, we don't. Are you noticing that? Why don't we buy at these levels? Why is that the case? One, because our weekly profile hasn't dictated that our buying should come in yet. So we can see that underneath here, we can say, oh, well, there's buying underneath here because we're moving higher, right? No, that's not what's going on. What's happening is we're pricing into these levels because if whatever buying would be, well, they're interested in the selling liquidity that's inside these levels. Okay. So that's why they're constantly hitting these levels and knocking off of them is because they're collecting selling liquidity from those levels. Okay. So then we had the speech. Do you notice something about the speech? We use both of these levels or actually we use this lower level to push us higher into this upper level, right? And then we dip down into discount. Once we reach discount, we reach higher, okay? Into where? You could say this order block. That's a little bit disingenuous as far as how we're doing our read here. about what's going on. But no, the midpoint of the weekly candle is another area of mechanical fair value. You're going to see a lot of orders come in once we reach the midpoint. So we stab through it really hard, stab back down through it really hard. And then what happens? Look here. Look. Wick. What does the wick do? It reaches up, it pokes it, and then it breaks down, right? Isn't that crazy? So this whole time, what I'm saying is that we're in this premium. We're in this premium zone. Did I define the premium zone at all by price action at all? No. Why? Because this is a market maker's idea. What does a market maker's chart look like? Here, I'll show you a market maker chart. Are you ready? Are you ready to see a market maker chart? Okay. And we also have to get rid of these, right? This is a market maker chart. Look at that. See? No, I can do it just by zooming up, right? Let's go this way, right? It's a little bit easier, right? See that? See that? That's a market maker's chart. Okay. What do you see? Do you see candles on that? No. What do you see? A big figure, a mid figure, a mid figure, and some more big figures, right? Because that's all they care about. They don't care about your candles. They don't care about your stuff. They don't care about any of that stuff. Do you know what that stuff is designed for? It's designed to take your money. That's it. It has no other purpose. And by the way, this is kind of slick. If you like how these candles look, by the way, I kind of like how these candles look. I also don't like. This is a little bit easier on my eyes, as far as like just focusing and being able to see the candlesticks. But I can see how it's difficult. Over time, this will be bad for your eyes. So I like this option in TradingView that you can just add or remove the body. Because I can turn off the body sometimes if I want to save my eyes and not get a headache. And I can turn it on if I want to preserve my vision a little bit. So, but that's very cool. Anyway, so a market maker chart, it has no candles on it. It has no it has no freaking DOM, and it has none of that stuff. They're not looking at time and sales. They're not looking at anything. They don't fucking care. What they care about is the price. Um, so it's the trading price. So that's what's going on. They also have to care about time, but caring about time for them, that's not really um, that's not really because they're like, oh, it's time to I have to watch my watch. I have to look at my watch, and I have to use that to judge what the market is going to do. No, no. That's not what they're doing with time at all. Time is when they get their orders and when they have to work their orders in the marketplace and what types of orders they have to work in, right? Because this is time, that this is done on a measure of time. That's true. It's Wednesday to Thursday. This is a Wednesday reversal, right? Is that a Wednesday reversal? No, I think it's more of a consolidation. Friday. Is that a Thursday reversal? Yeah, because Monday trades up, Tuesday trades down. Yeah, so that's still a Tuesday reversal. Wednesday trades down more. So is that more like consolidation? And then Thursday reversal? Maybe. Maybe. Yeah, it might be a consolidation Thursday reversal, right? So it's like Monday, Tuesday, Wednesday consolidation. No, no, Monday and Tuesday consolidation, and then, huh? What would you call that weekly profile? If if you're watching this, and you got that far, if you're watching this and you got this far, tell me in the comments what would you call this weekly profile? This is really the only one we're gonna example. This is the only one we will examine in detail like this, and then I'm gonna show a couple more. Um, but I'm more just gonna kind of show you um, them, the profiles, right? So also check this out. See how well this one's being respected? That's because it's anchored on that high, and this is anchored on that low. So so yeah, but no. This is because there's sell orders in the marketplace, right? And that's why they're selling. So and that's really what the time element is about. That's what the time element is doing, and and also they're trying to get here. That they're trying to get into discount, so they're using all the sell orders that they're getting to take them into discount, right? So so yeah, and then they flip, right? They buy, and then they're chopping. Why are they chopping? They're chopping because they don't know what they're gonna do. Um, well, should I say they don't know what they're gonna do? Because they do know what they're gonna do. That they're just not convinced. Convinced. Because remember, you saw those levels, and it was selling off those levels, right? The problem there is we had held price action until 11 o'clock, basically, and then from 11 o'clock we decided which direction we were going to move. Obviously, way ahead of time, they knew when they were going to move, but this was kind of what's the word? And yes, I know you could say that there was news then, but there was not news then, at least not according to the economic calendar. Janet Yellen, she said something, I guess, and the market responded to that. And by the way, when the market responds to something, it's not because they don't know what's being said. It's not because they don't understand what's going on. Um, Nothing like that. Nothing like that. Because they understand what's going on here, and they know what's going to be um, told to them and given to them ahead of time. That's that's absolutely true. That's absolutely what's going on. But we the release of price action is the response to the news, right? They know that they're gonna do this. They know this is gonna happen. However, they're not going to actually do it until the news comes out and until the news is delivered. Wow, my tea is almost cold now. Not quite though, so it's still okay. And then we got this. And then from this, we inverted. This inverted from this inverted. This went from premium, and it became a discount. And then we started treating that as a discount, right? To move to where the big figure. This right here. Okay. So it's still technically too early to see if this is premium or discount, but this was rigorously according to this the the way that you would read this, you would be able to treat this as a premium, right? And the reason that, especially on a Friday, you could treat this as a premium level is because it's Friday. right? So on Friday, especially a non-farm payroll Friday, um, price action is going to have a quality. Um, this still has the quality that I'm talking about right now of sideways, of consolidation, of not doing anything. Okay, that doesn't mean that it's actually not doing anything, right? So because obviously we have this massive uptrend and we have this massive um, Judas swing going on, which resulted in all of this movement, right? Um, I would not argue that that is an actual consolidation in the practical um, sense of what it is, but it has the qualities of consolidation. What does a consolidation do? It does, in ICT's words, fill in efficiencies, and but more importantly, it respects premium and discounts. Okay, there is a premium, there's a discount, and there's an equilibrium level in the consolidation. Okay, as you can see, there's an equilibrium. Boom. There's a premium, and there's a discount. No, actually, there's a discount here, right? Or we can argue that there's a discount here. Okay. Man, I'm tired. But because we have this premium here, what does it do? It rejects, and it comes higher, and rejects ultimately, right? So that's why I would see premium and discount this way. It's because look at this. Um, we drive down, we activate this order block, and then we violate it immediately. What does that mean? What does that show us? That shows us that this is a discount level. Okay. Nothing other than a dis. If I'm sorry, if you drive into a discount level underneath a bearish order block, it's likely to fail. Okay. If we drive above a bullish order block in a premium level, it's likely to fail. And what did it do once it drove above this order block? It failed. Does that make sense? And then once it broke underneath here, it started respecting this as an order block and respected this one. And then this one is sitting at equilibrium, right? So then it just started chilling, right? So anyway, where was I going with this? On one side of the week, they're gonna buy it. On the other side of the week, they're gonna sell it, right? That's the whole idea behind a weekly profile. There's a high and there's a low. Okay? Excuse me 1 second. Hello, hello, hello. Testing, testing. I switched microphones, by the way. And I still have the lag, apparently. Hello, hello, hello. Man, I'd like to get that back up. Okay, so on one side of the week, there's buying. on the other side of the week, they're selling. Let me turn this off. There we go. So we basically have a little mini weekly profile from here to here, okay? We sell, 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 sell from the high. Where are we while we're selling? We're in premium, okay? If we get into discount, what are we gonna do? We're probably gonna stop, okay? Or we're gonna kind of get that little gritty, disgusting stair-steppy price action that that has a lot of wicks and is really disgusting to work with and it's hard to deal with, and that's going to take us down into our discount level of interest, and then from selling from our selling we buy, right? And there's our buy. That's probably a buy of some sort, and that's also probably a buy of some sort. And we come up. This was definitely a buy off of that daily level that we cherry picked, and that's something that sucks. By the way, I don't like cherry picking. Um, so if I were looking for if I were looking for a long on this day, I would miss that whole day. I wouldn't understand what's going on with the day. So but basically we do longs, longs, and some more longs, and then we actually invert the level. Okay, this stops being treated as a premium. Why? Because we escape it. We come up into premium and we actually start treating it as premium, and then we break above this high and we escape that tendency to be in premium, right? So then once that happens, what actually happens? We invert, right? So this is no longer a premium. This is now treated as a discount. This is predominantly a discount. Okay. So what's going on there? You know how I said the 49 big figure? Um, if we were to go to a market maker trying to book this level, we would say, get me in below 49 big figure. Or if we were trying to sell it short, we would say, get me in above 49 big figure. There is another guy up here who is doing the same thing that we are, but he's doing it with the 5,000 figure, right? So the 5 big figure, or I'm sorry, not the 5 big figure, 5 big figure. It's a 50 big figure. That's what we should call it, right? Because that's basically what it is. So the 50 big figure, he's gonna say, I want in either long underneath 50 big figure, or I want in short above 50 big figure, right? And it goes on and on and on for all the big figures, basically. It's almost algorithmic, and I know this sounds kind of weird to want a price above the market price, but it's the markets. It's the markets, man. I mean, don't think about it too hard. so yeah. That's really what's going on. So instead of serving the 49 big figure traders, they're now serving the 50 big figure traders. Okay. That's what I mean by inverting, right? It changes over from serving these guys to serving these guys. Okay. So that's what we're seeing. And I would ask if there are any participants, but there's nobody in here. Or, well, if there are any participants. No, I don't want you participating in the markets. I'm not a financial advisor. I'm not a trade advisor, so I would never ask you to do that. But if there are any questions, feel free to put them in the comments after the video is streamed. Feel free to like and subscribe. All those beautiful things. Well, man, just thinking about how we're going higher, that still pisses me off. All right, so I'll go take a whiz, and I'll be right back. Okay, thank you for your patience. I am back. Okay. So what does this have to do with the weekly profile? Well, we're gonna buy under discount. We're gonna sell above premium, right? We're gonna use premium to sell throughout most of the week, if we're bearish, and then we're gonna use discount to buy, right? Is that easy enough? And then we're probably not gonna go back into premium. Although once we're squared up for the week, which is like selling, get short, and then offload. What's going to end up happening is price is just going to kind of ignore the premium and discount rules as far as this framework, this scaffolding is concerned. There are actually minor scaffoldings. In fact, I'll show you one right here, literally right here. This is a minor scaffolding, okay? Price did not have anything to do right here. Hold on. I might actually have a better example. This one right here. That one right there. Hold on. I know, that's weird. So there's buying and discount, by the way. Before the all-time high was printed, buying and discount. And then the all-time high moved up into an existing premium, by the way. That premium was there. So don't let nobody mess you up, right? That premium existed already, okay? And then we bought some more, and then we were done for the period, okay? And when we were done for the period, we hung out around one of these minor levels. We had a premium, and discount, and we also had overbought. Okay. What happened when we went into overbought? We sold off, right? Is that starting to get your gears turning? What happened when we went oversold? We bought, right? So so when we're not doing nothing, when we're doing nothing, we're gonna be around one of these levels usually, one of these red levels. Okay. Let's see if there's anything else. Yeah, this was another case. They were waiting on Janet Yellen, right? Um, so since they were waiting, since they didn't care about anything else, they just sat. They had a premium, and they had a discount. Okay. And then you could do out your PD array matrix if you so choose. Um, but to be honest, other than I don't like using PDs for targeting anymore. I like using them as dealing ranges mostly. Because the thing is, when you're using PD arrays for targeting, you usually have to sit back and appraise. No, you don't appraise anything. You sit back and you submit to watching them confirm or deny whether or not they want to be respected. And it's cool. It's kind of nice, but at the same time, um, it could be a little bit more accurate than that, or it could be a little bit easier to confirm level than that. So yeah. Anyway, where was I going? Yes, a bullish week. Okay, so a bullish week, basically, it's going to be the opposite of this. I know this did turn into a bullish week, but this has the anatomy of a bearish week in it on this lower time frame. So a bullish week. Let's see if we can find the start of the week. This one, this one, this one, this one, this one. We're gonna have our buying, and then we're gonna move higher to buying, right? And then we're gonna have our selling, right? And we're also gonna have that stay put, okay? So see how that works? We buy in a discount and we sell in a premium. Is that starting to make it kind of click? Is that starting to make it kind of make sense what's going on here? And of course, there's nobody in my comments. There's nobody watching my stream. Nobody cares about this, at least right now. But that's essentially what we're doing. We're buying in a discount, we're selling in a premium, we're selling in a premium, we're buying in a discount. How is that defined? Is that defined by your price swing? No. Is that defined by your, I don't know, your consolidation high and low? No. Is that defined by anything to do with candles? No. Absolutely not. In fact, I think that's ridiculous, right? How that's defined is these levels right here, right? The big figures and the mid figures, period. That's it. Nothing more. And definitely nothing less, but nothing more. It's not like um, it's not like there is any other form of premium and discount really, because if you really look at it, if you really think about it, how are they going to print a premium or a discount? How are they going to print that into a price swing? They're not really going to be able to do that, right? They're going to already know where the premium and the discount is, and does it make sense for it to be anything other than a round number? Not really, right? You can place the orders. You can put the orders into the market at places other than round numbers. That's true. But where how are you going to judge price action? Is it going to be through those little granular, tiny little things like if you go into the bond market, uh, you're not going to be able to see. Well, if you go into the bond market and you think that the minutes are going to be something that you're going to make a decision based on, you're crazy. You're absolutely crazy. There's either 60 minutes or there's 32 minutes in in the bond price, and you're trying to make decisions based on that. That's the same principle, right? We're always going to follow that same principle. We're going to make our math easy, right? We're going to make our decisions easily, right? With our math being easy. We're not going to worry about um, any of those or anything else basically like that. So, all right, let's continue looking at the look back on the daily. Yeah, there we go. And our hypothesis is we should see immediate selling at that high, which we do. Almost no bodies. And then down here we bracket this, right? There's kind of like fake selling, really sad, like, or I'm sorry, fake buying, really sad, like movement up, kind of, which ultimately rolls over, turns into selling. Ugh. Ugh. Daily, right? Yeah. I'm tired. Should probably get sleep. And don't worry, I will. I know you guys care so deeply about me. So that was the Monday, right? Monday did what? Drive up. Why? Just trying to take premium, right? Oh, we can also look at the 1 hour chart. Um, the 1 hour chart is basically going to tell you what the 15-minute chart will tell you. It will just tell you in a much clearer, much less ambiguous way. So when you're analyzing the chart after the fact, especially like this, you can use the 1 hour chart and it's going to unmistakably tell you exactly what's happening in the chart. And the 4 hour chart is even better. Um, Typically, it's not going to show you the really granular cells and all that kinds of stuff. It's going to miss some. So you typically want the 1 hour. But it's cool. It's cool. It's cool. It's fun. Let's go on a 15-minute. Take a look. And what do you notice about this? There's a 49.25, which has a short-term. No, it doesn't not have a short-term discount, right? How do I know that it doesn't have a short-term discount? Because look. Should I say look? Yeah, well, I used this price action as an example of the use of these levels and how we should use them for what's the word? I guess appraising. Well, I guess appraising whether or not you were bullish or bearish. That's actually what I mean. So I used this piece of price action as an example for figuring out whether or not you're bullish or bearish using these levels. But here, you can see that there's bullish and bearish pressure there. Actually, there's these very short-term levels, which on a session basis, this can actually be a premium and a discount, believe it or not. So you can see that this was discount. This actually hit off a monthly level, not a monthly level, a weekly level. So there was a weekly. We go on the weekly candles. There was a weekly level. Did I not drag over the weeklies? Feels like I didn't. Right here. Oh, we'll just put that. And it's blue because it's a weekly level, yeah. I think that's fair enough to it. And we'll drop back down to the 15-minute. Like nothing even happened. But this was a weekly level. We see how it wicked into it? And then it just kind of chilled. From there, we just saw something that honestly I didn't even. That's not even. It's readable, but it's garbage. It's very very hard to follow, and to be honest, I don't think that there would be any reason for you to be following that. All that really did was come up to the 49.50 level and become extremely oversold. Or I'm sorry, overbought, right? And then from there, it came down and did its thing. We need the next examples, by the way. Oh, by the way, I'm using the settlement price, and the reason that I'm using the settlement price is because that's the sensitive one. The true price, if there's a settlement price, is not going to be as good. So we can see here we dug into discount. As we reached into discount with a level, right? We bounced, and then we came up into premium. And then as we reached up into this more extreme premium, no. So let me explain this one more time. So this quarter level, this 0.25 level, was the level that we were using, right? Why were we using that? Because we were done for the week. Okay. We were directionless. We were no longer doing much of anything, right? No orders on, no orders off. We come down. This is oversold. 4,900, 49 big figure is oversold. Okay. At least in this framework, right? So we bounce, we bounce. We go higher, above this, above the 49.1250. I know that's hard for me to read as well. This chart is busy. This chart is actually terrible. This chart is very, very hard to work with, and so that's why I don't like having all this crap on it. But I do need it to show you. We come up into the overbought. Hold on. We can do this. 49.25, right? Yeah, 49.25 is our new premium. And then our new discount is 4,900. Yeah, okay. 12.75. There we go. Oh, 12.5, I'm sorry. You can tell I need sleep right now. And no, I'm not going to bed yet. I'll finish my mission. We'll even do our top down eventually. So this is our discount, right? Then this is our new definition of premium and discount. Is that starting to make sense now? So you see, this is a weekly level right here. This under here is a daily level, and 49 big figure is extreme oversold, which is just regular oversold, to be honest. Then we go above 49.25, that's overbought. And so we sell at this daily level and at this weekly level. Comes down, and now we're in discount. We're gonna buy, right? And then we're gonna sell, right? Kind of neat, right? Actually, what? Although probably disingenuous. Give me 1 second. Because I think I forgot to move the weekly look back. Yes. Okay. So I forgot to move the weekly look back one more. Right, so we need to do this. This is the only problem with not all of them. I could have sworn there was one more line. But this is the only problem that you'll have with these premium and discount. Premium and discounts? No. There's not really any problems with the premium discounts. To be honest, they're pretty damn close to perfect. But it's a problem that you're gonna have with the the mechanical fair value. And let me show you that last one, right? 10. Perfect. 10. Okay. And you could just imagine that's a white line. Undo that. Yeah, see there, I found that low. Right? So I hope this concept is really starting to make sense. The buying and the selling, they happen at those levels. Okay. On one side of the week, you're buying. On the other side of the week, you're selling. Not you, but the market makers, right? Does that make sense? I hope. If there was anyone to ask questions. I feel lonely. No. So was my expectation we're going higher? We're going through this probably, completely through this, by the way. I really do not expect to see any kind of pullback, any kind of nothing, any kind of anything. I'm just expecting it to charge right through. So now, what can the week look like? Let's look at our weekly profile. Okay. And no, I'm not putting PDs on the fucking shit, right? I mean, I gave you enough to just fucking do it yourself. In fact, I taught you what premium and discount was. So if you can't do PD arrays now, bless your soul. I don't know. I don't know. And don't ask me questions about the premium and discount ideas, because well, you can comment, but don't reference it, because I'm not trying to I'm not trying to get it out there. It's just kind of a treat for whoever's watching this, because nobody's watching this, right? And the thing is, it's just going to be buried in videos, right? I'm never going to talk it again. I'm never going to talk about it again, outside of this video. I might talk about it in the comments. Depends on the type of question, and if it can be answered generically without showing what's actually going on in this video, what the content is or anything. But yeah. Anyway, let's get into it. So this is our economic calendar. Immediately, we have JPOW. Okay. Why is Jerome Powell speaking at 7 o'clock in the evening, while on a Sunday, basically? I don't fucking know. I have no fucking idea why he's doing that. I think it's like a 60 minutes thing. Let me see. To discuss the economy and inflation risks in an interview conducted by 60 Minutes. That's okay. Not really sure how the market's going to respond to that, but that does show us that right out of the gates we can get that pop up through that high, right? Then we have ISM on Monday. Basically collect the red folders, look at the red folders. Okay. Take a look at that. Orange folders as well. 12 p.m. What is this? Fester speaks. Yes. The Goblin speaks. Wednesday. Okay. If you're in oil, if you're interested in oil, there you go. 10:30, that's the time for you. But we have 11 and we have 12:30. Okay. So that's probably going to be a split session. Oh, that's going to be a split session. That's going to be one hell of a split session. Because we have the 10-year bond. Unemployment again. And we have barking. He's barking at us. There you go. So basically, what are we doing looking at this? We're looking for potential turning points in the marketplace. Where can we see injections of liquidity? Okay, so they can obviously come anytime, any place, anywhere, and they can be anything. However, this calendar, these things, these news events, all this stuff, basically what that does is that gives us turning points in the marketplace. I don't know how it's going to work out. I really have no idea. However, interesting. No, I heard a noise. I'm sorry. I'm not really learning anything new looking at this stuff. It's just it's and I start getting peeved by the market stuff, start getting a little fatigued, and then I just start scrolling and saying some random crap out of my mouth. So the most important news here is front loaded. Okay. And the unemployment claims, we've already got those. Okay. So what does that tell you? That tells us that right out of the gates we're gonna do what we're gonna do. And basically, this is going to be one of those. It's going to be an interesting week. Kind of want to keep my eye on the price action. I don't want to overextend my analysis that much on a week like this. Okay, so because of that, because of seeing an economic calendar like this, especially with a J Powell speech immediately, are you crazy? I'm not making any predictions at all. I don't know what's going to happen. Okay. Direction up. The end. Where are the bookends? I have no idea. Okay. Where are the bookends in price? I believe that we're in discount. And we're going to move into premium. Okay. Remember what I said about this over here. Oh, no, this over here. Yeah. Remember what I said about this over here. Okay. Discount, premium. Okay. It does not reference the price action at all. It does not reference explored territory where there's been gyrations, where something's been printed. It references the price levels, okay? So, discount, no. Man, you know I'm tired now. Discount, all of it, actually, all of it. Premium. That's my expectation, okay? We might even be able to get through this if we're bullish enough. If we're powerful enough. I don't have that expectation, but we might actually be able to reprice all the way up to the 51 big figure, which fucking crazy. But they're gonna do what they're gonna do. Okay. So as far as the Dixie is concerned, I have no idea what the Dixie is doing. Why don't? Oh, I didn't even show you. Man, I didn't even switch my screens. Okay, let me go over that one more time. Okay, so we have our premium up here. Even though there's no price action there, even though there's nothing printed there, that's still premium. Why? Because it's 50 big figure. If you want to book 50 big figure, you'll have to buy here. Right? If you want to book 50 big figure, you have to sell here. Make sense? It doesn't matter what the candles are doing. You have to sell here. So, and otherwise you're not booking 50 big figure. Okay. So premium, discount. Does that make sense? I hope that makes sense. Okay. All right. So let's see. What else was I going to go over? Six cards of pony and value. Wow. It's a little black pilling. Don't want to know if I want to. Recession inverted. Are you kidding me? You're fucking retarded. Recession averted. Oh, let me show you what I'm looking at, by the way. You see that? They're doing a fucking victory dance. Yeah, but basically this is telling us that they're gonna pump the president, right? So, dude, if we go to normal news proper. Where is it? Where's the one? Over 95% of the votes. Like, are you fucking kidding me? Biden is gonna landslide? Or are you like you have to be fucking retarded to believe that these are actually real numbers. And oh, let me switch over really quick. Jesus. Please. Thank you. But my expectation is that the Russell 2000 is going to roll over. And by roll over, I mean rotate over and move higher. I believe it already has rotated over and moved higher. And started moving higher. Let's check on that, by the way. Let's check on that. Now, why are we looking at the Russell? It's the Russell. It's the worst of the indices, right? Let's get rid of it, by the way. And the thing is, no, this is more of a This is more of a manipulation filter than anything else. Okay. Previously, my opinion on the Russell was that it's a volatility filter. Okay. Well, volatility filter. It's a manipulation filter. So while the rest of the market is getting manipulated, the Russell is 2,000 stocks, almost all of which are very low profile. Okay, so they have very low priority for being manipulated. What that means is that the Russell is going to follow what the equities are actually supposed to be doing. Okay, thus far they've done that. What do you see now? yeah. Inconclusive, not quite, not exactly. Um, it's not quite there yet, but it's. I would almost say that that's all she wrote. I don't and shit fucking pisses me off. This is gonna hurt a lot of people. You guys know that, right? This is gonna fucking hurt a lot of people. This is gonna get a lot of people fucking killed in war. Um, a war that, quite honestly, I don't even know if the country is equipped to fight. Do you know why we haven't bombed Iran? Oh, do you know why we haven't bombed Iranian targets yet? It's because the U.S. wants to reserve its ability to use its troops at home. Right? So it's not going to commit them to a war. It won't do that. It will not do that until it's used it on its own people. And I don't know how that's going to go down. I don't know how that's going to work. On one hand, they're fucking idiots. The troops, honestly, they are fucking idiots. They would do it. On the other hand, their heart's not going to be in it. So I don't know. I guess we'll see what happens. By the way, why is war necessary abroad? The reason is because the U.S. has to make sure that the BRICS don't come out with their own currency, um, with blackjack and hookers, right? So they don't want a gold-backed currency, right? A cool kids currency. It's is not good for the U.S. dollar, right? By the way, let me take a look at this timestamp. 4:50. Wow, it's almost 5 hours. 4:50. I need that for reference, by the way. There we go. So we'll add that to the list of timestamps that I'm interested in. 4:50. Okay, so yeah, that when the BRICS currency comes out, that's just gonna annihilate the petrodollar. Because the petrodollar is ass. Like it's the worst fucking currency that's out there. There's nothing. You could say it's the best bet of the ball. It's not. Do you know what makes it great? The guns pointed at everyone, making them use the petrodollar. That's what makes it great. So yeah. Reload this. Did we see the interest rates? Okay. So the interest rates are also very important. Let me shuffle into this. Make sure. These are also going to be important. There's the US, the euro, the pound, Aussie dollar, New Zealand dollar, Japanese yen, Canadian dollar, and Swiss franc. All of these are very consequential. The next meeting, that's going to be very important. Okay. So we may be propped up, or we may be actually suppressed until March 20th. And then we're going to start dropping our rates. Okay. The Bank of Australia may actually start dropping its rate next week. So be advised that may actually happen, and that might kick that shit off. Because with the currencies, the way that they trade, the way that they move, moving higher or lower, no. Money seeks yield, okay? And all of these interest rates, they move more or less together, right? When a European currency rate moves higher or lower, typically the rest of the currencies react, all right? So we might see a reaction we might see a reaction if the Bank of Australia amends and changes their interest rate. So just be aware of that. Be careful of that. Prediction. Tuesday low of the week. That's my prediction. Now, when I say Tuesday low of the week, that doesn't necessarily mean that it's going to make the low. Tuesday low of the week, at least in my conceptualization, is when Tuesday trades down significantly and makes a significant low. Monday can trade up all fucking crazy all it wants, so that way it's completely hopeless for Tuesday to get down to the low underneath Monday, right? As long as Tuesday makes a significant low, that's a Tuesday low of the week. Now you might say, Mike, you're trying to miss the whole week. You're trying to miss parts of the daily range. Or I'm sorry, you're trying to miss parts of the weekly range. The thing is, I can't control this weekly range. I don't know what's going on, right? It's very confusing, and by confusing I don't mean like it's confusing me. I mean that there's so many places where the market can make its decisions. I'm quite certain that this decision is going to be higher, but I don't know when it's going to make that choice. Okay. So it's like you can be right, but if you're early, that's the same as wrong. You know what I mean? Especially with us, with leverage, if you're early, you're very, very long. You're getting splattered. You're not, yeah. So that's what's up. I think, and I'm not going over commitments of traders. The reason I'm not going over COT is because we're getting an entirely new paradigm, okay? In the marketplace, we used to have certain correlations, certain ideas, and certain investment priorities, okay? That shifts. That is no longer the case. That no longer exists, okay? We might have the same intermarket analysis. We might have the same intermarket relationships on very short terms, but we're not doing the same thing. We're not on the same program at all. So I don't want to look at commitment of traders. I don't want to look at a lot of intermarket. I don't want to be focusing very heavily on much of anything else above what I just focused on right here with the S&P. Okay. So if that makes sense, basically just up. Whatever you're thinking, whatever it is, whatever's going on, up. And that's my prediction. If it's dollar index that you're thinking about, I have no idea. Okay. So that's about all I got for you this week. I guess next week we'll figure out some more of what's going on, and I'll deliver a little bit more of a more traditional way to read the marketplace, and I'll try to bring in some more because those reaction levels, which I call mechanical fair value, they're very, very, very powerful in the light of premium discount. However, I'm trying to find different ways to ring them in, to make them actually work. Um, because the thing is, to make them actually work is if they don't work. No, no, they work. They work very, very well within the context of premium and discount. But the thing is, I'm not trying to make premium and discount a public, openly spoken about thing. I don't want that to become my thing here on this channel. I want this free channel at least to be more of a to be different, to not include those potent ideas. So anyway, we'll figure it out. Anyway, hope you enjoyed the presentation. Have a good